The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. No Mr. Whipple around here, but we will continue, we will persevere, and we were back into the breach once again, dear friends. And as we start to show off here, let me just make sure that I've got it. Yeah, 2067. We had quotes this morning that were starting to lag a little bit, and I wanted to make sure that everything had come back to where it's at. Off 2 points on the S&P cash. You don't have to ask about volume today because we had it. And I mean, not just a little bit of volume, but massive bone-crushing volume today as we went lower. And why some of that was back on the way up, a great deal, a massive amount was lower. So the low of the day, 2044, is up, and we need to go test that before we probably go any higher. I'm actually thinking that we've got something more like about 1990 on the S&P cash before this is over, and that's just the first leg. There's some minor movements back and forth, but I'm looking for something like 1990 on the S&P cash before we see any meaningful movement. And the other thing is, it's not going to happen overnight. It's not going to happen in a matter of days. I was talking to one of my gentle readers for my newsletter, and I had to say, you know, this is going to be a war. It's not going to be a bunch of little battles and skirmishes. This is going to be a knockdown, drag out all the way back down until the FOMC raises rates, of which we've got announcement tomorrow at 2, and we'll talk about more about that. But 2.8 billion shares already. I'm going to have to knock on the monitor just to make sure it's not stuck. 2.8 billion shares already. We're going to get our probably 4.2 to 4.5 billion shares that I've been waiting on for forever to give us a good sign. But I don't think anybody can make a statement that this is not down volume. They may be able to say, and I could almost agree with them, that maybe we had a exhaustion move this morning. I suspect they're going to try to push this up into the FOMC meeting, and then probably going to see disappointment tomorrow. But I don't expect it's going to be one of these things where at 1990 tomorrow. It could be, we could have back and forth. It could take to the end of the summer. It could be, 5 points up, 7 points back the next day. This could, like I said, I suspect this is going to be a big war. One of the reasons why is just how active the Fed is in on the edges. And I see their ghostly fingerprints all over movements in the markets today, mostly in the dollar index. They basically... it's kind of like Star Trek when they always had to get away from a planet and they had to, Scotty, I need 110% of the engines. Well, sir, we're going to blow up the engines. Well, they threw everything they had at it. We're off maybe a quarter on the dollar index today, 96.94 on the current contract. And there just isn't that much out there. They're able to work at the edges. They're just not able to really get significant moves up. Because as soon as everybody starts really getting higher, what do we have? Huge selling coming in. And we've talked about it for a long time at 2106 on the S&P cash. That's where the volume just went away, to 2108 on the S&P cash. Volume just fell off a cliff every single time. We went up there 4 times. 4 times the volume just disintegrated. It was vapor. And now I suspect that level is at 2070. We got to 2071. And I think you're just going to see that we've created a cult of people that can only buy pullbacks, but they can't buy breakouts. And so now we'll have all these pullbacks. Everybody will buy them. They'll see that they go nowhere once they get back to neutral, and they'll start selling them. So I'm not expecting the world to fall off the edge of a cliff, because we're going to have every central banker from Europe, China, Japan, and the United States actively trying to do one thing, and that is maintain an orderly market, an orderly retreat. They don't want to see everybody take off running and all get shot in the back. What we're going to do is a little over here, a little over here, a little over here. But we've got basically 1929 conditions in China. We've got maybe 100 different ships in the ocean that are racing for ports, trying to offload their oil. And we got, I mean, there's so many balls in the air. All it takes is one for the juggling to have a problem. I think that the feds are kind of on top of it, but there's nothing that they can do out here. If the market's going to pull back, it's going to pull back. They'll try to just do it as slowly as possible and keep the fingers in the dikes, as the young people out here. And we got a lot of this stuff going on. Why don't we just get into some history here and start off the show?
Well, it's all just a little bit of history repeating.
And on this day in 1930, construction of the Hoover Dam begins. Over the next 5 years, a total of 21,000 men would work ceaselessly to produce what would be the largest dam of its time, as well as the largest man-made structure in the world. Although the dam would only take 5 years to build, its construction was nearly 30 years in the making. Arthur Powell Davis, an engineer from the Bureau of Reclamation, originally had his vision for the Hoover Dam back in 1902. His engineers reported on the topic, became the guiding document when plans were finally made to begin the dam in 1922. It's supplied electricity every single day since then, and it continues to work perfectly. If you've ever had a tour of the dam, which I don't think you can get now because, of course, the terrorists won, and why can't we just profile? It'd make my life a lot easier. I want a profile. If we get a lot of people yelling Akbar or something, maybe they shouldn't go in the dam. Maybe that's what we should do. Anyway, I don't think you can go in the dam anymore. Of course, they built a bridge so someone couldn't drive a semi across it that was loaded with dynamite to blow up the dam. So you can't even really drive over the dam anymore. I think they've sealed that off too. But I went over there several times. Started going to Las Vegas in about 1985 or 84, something like that. And I went up there on tours several times. Thank God I did it when I could, so I could go through there. But what else can you say? What else do we have? Oh, anyway, I was just going to say, if you've ever taken the tour of that thing, kind of interesting. They talk about all the people that fell into the concrete. I wonder if that's apocryphal or if it's actually true. The other part that I know is true, because I've talked to concrete engineers, is the concrete is, especially in parts of it, is so thick that it is still setting and still drying to this day. And kind of a little jelly center to the huge Hoover Dam. Of course, it was part of a works construction project that was it was one of the first real shovel-ready jobs that we've heard so much about in the last 7 years. It was a true shovel-ready job, and they got right to it when everything, the wheels fell off the wagon. But it had been in the works for some time. But we in America occasionally get something right. And minus a snail darter, we probably should be building these all over the place. The Eurozone, the DAX was down almost 2%. FTSE was off 1.6%. The CAC off 2.25%. And when we get to Asia, this is where the rubber meets the road, the flies in the ointment, and I need yet another mixed metaphor. Nikkei was actually up as cash is leaving China. Shanghai was down 1.26%, but that's a little misleading. The HSI down 1%. Again, kind of misleading, because guess what? Nothing in China is as it seems. One of the problems is over 700 Chinese companies have halted trading into this morning to, quote, self-preserve, according to the state media. That means that they're manipulating stock by just closing them. I'm going to play some clips again that we played last month in a segment that I call
I informed you thusly.
Because I did. And that was the fact that they could close stocks at any time. If a company wants to just quit trading, they just call up and say, hey, pull the plugs. And that's it. And we remember how that worked. If you were around in 87 or 98, maybe I'll get Andy Heck to talk about it since he was working there when people would just walk away from the phones. And maybe he can give us some insight. He's going to be on the next hour. Maybe he'll talk about it during the next hour when everybody just walks away. Well, they don't even have to walk away. They just say, let the answering machine handle it. We don't have to let them sell our stock. We'll just hang around till they give up. And that is where the real problem is in China, is that you never know what you own. You never know the rules because they can change them anytime, and there's no way to sue them, so there's no way that you're ever going to get a fair shake out of them. I think people really do not think that China and Chinese have a very different cultural ideal of what it is, and that is everything that you have over here in the United States belongs to them. That you just haven't given it to them yet. And it's kind of an interesting, very capitalist kind of idea that we have lost somewhere along the way. I believe the other thing, everything they have should be ours. That would be true capitalism. But we've kind of disarmed ourselves on that, thinking that we're the good guys. But, of course, they're going to use all that cash to build more military, and we're probably going to see some shooting and firing, not in the too distant future. Of course, you could already say that for a lot of what's happening in China, they are already in a 1929 meltdown in their stock market. I think you can easily make the case that we aren't about 7 to 10 days into the sell-off that we saw in 1929. And it could get a lot worse, especially for people that haven't traded in markets, never know what the market looks like when it goes down, and has always seen the Chinese government manipulate the market at some point. I mean, they've already lost $2 trillion in that market. And we heard the famous saying last week that I passed on during the show. I don't know who said it, but basically China. Then he said it was a $7 or $8 trillion penny stock. Now a $6 trillion penny stock. That's it. And no, I'm not politically correct. Up your nose with a rubber hose, Mr. Cotter, and your politically correctness.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, since Andy Hecht came on board here at TFNN, we've been IMing for whatever it is, a year, 2 years? I forget what it is now. Anyway, we've been IMing, and we've quickly become the two old guys that rip on everybody in the Muppets, sitting up in the box. Yeah, I'd say that, in the opera box. And he has promised us in the next hour a epic rant of biblical proportions. So I'll look forward to that. Maybe a little bit more about Animal House and how that's developing. Stettler and Waldorf. Yes, that is correct. We will give our engineer a gold star. Anyway, China continues to be an issue. Look for that tonight. Just the question is just how many stocks quit trading and at what point do the markets just stop? I was actually short China. I could not get an answer. I called 5 times on Thursday. I called yesterday morning and decided to get out because I was afraid what the ETF would do if China totally shut down. It certainly looked like they were headed that way, and they'd been talking about it over the weekend. So we exited yesterday, but I had left some money on the table. I don't like it, but there's one thing that I learned early on listening to TFNN before I was a contributor and a mere listener like you. I'll remember all you when I'm incredibly famous. Instead of this, sort of famous now. But this had to be probably 1999 or 2000. Tom was off on vacation. They had a gentleman sitting in for him. I do not remember his name. Tom does. But it was, I had only been trading a couple of years, and I hadn't been trading commodities. And this was when commodities went lock limit quite often. But I forget what the guy was trading, whatever it was, corn or wheat or soybeans or whatever. It was some commodity. And he had taken $20,000, $30,000. And over the course of the summer, he would come on with Tom and he'd talk about it. It had gone to $1.5 million. His original $30,000 had become $1.5 million. And he's looking at it on the afternoon. He says, I'll probably sell it tomorrow. And guess what? Every day, lock limit down. Every day, lock limit down. It was the Roach Motel. It let him in, but with $1.5 million, it had gone down to $50,000. He basically could not get out of it. Every single day he came back. I don't know what it was, and I'll have to remember. Maybe Tom, when he comes back, I'll ask him again. But there's a reason why, and it stuck with me, and there's a reason why I say sell when you can, not when you have to. Incredibly, especially if you're in something that has lock limit down. But when you have the government closing things, you got a 9/11, that's kind of maybe you had some other issues, a lot of stuff happening in and about that. But what else can you say? I do have some other stuff going on out here, and I'm trying to remember what it was. Oh, I wanted to get back to I told you thusly. But actually, I'm thinking about some deep insights before we go to the break, and then we'll get into charts and everything else in the bottom half of the hour.
And now, deep insights and random thoughts.
Anyway, Andy Heck's going to be in the next hour, and then, of course, we've got John Logan in the 4 o'clock hour today, sitting in for the one and the only Tom O'Brien. I had some thoughts about cotton, and not trading it, but maybe Andy will answer these questions too in the next hour. And that was cotton as expensive as gold in the 1960s and 70s? I'm just wondering why, because I saw two things, or at least two things that reminded me. One reminded me of cotton today, and that is all these guys running around with the running of the bulls over in Spain. They're all wearing 100% white sailor outfits, running up and down the street. Is that so the blood will show just incredibly perfectly when they get stomped? I'm thinking I would probably wear something red that didn't look so like I'd been killed, in case maybe one of my loved ones was watching on TV. My first random thought of the day. The other was cotton incredibly expensive in the 60s or 70s? Because my dad treated his underwear like it was something to live forever. It got sheer as blind, or as drapes in the front room. And I can't imagine underwear that was that expensive. I'm glad that people don't do that anymore, especially running around in the old white T-shirt that's threadbare and the underwear that looks like it was shot with a shotgun. It had so many holes in it.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Andy Heck, of course, is IMing me here during the show, getting ready for his show. His dad will be 85 tomorrow, so maybe you want to call in and wish Andy's dad a happy birthday on the show today. You can always call me and wish me an unhappy birthday at 877-927-6648. And John Logan after that, of course. So we'll have a good day here anyway. Market's a little off now. Again, we're just going to see a lot of stuff whipping around, I think, to that FOMC meeting. And, of course, earnings that start Wednesday night with Alcoa and go on to next week. But like I said, I don't think that this is going to be over in a day or two, and probably going to go on till September. And everybody's going to think that the market's quit gone down. It's quit going up. It's quit going down. And I just suspect that we're going to see a lot of this, and that is wicked, huge whiplash pull buying, and then slow and consistent selling. And everybody's going to jump, maybe it's time to cover my shorts. It's pretty wickedly fast out here. And then we're right back to selling again. Of course, we're 20 points higher than we were at the lows of the day. But this is the kind of action that is a bear market. And that is these wickedly fast moves up and then slow and consistent selling the rest. But today's volume, we're getting ready to click through 3 billion shares. That's everything you need to know out here, and that is that we've got some wicked, huge volume today, and it's going to tell us a lot about what's going on. A lot of stocks out here that are at lows, and the volume was lower the last couple of days. But we went through and we had volume, so there's going to be some high volume lows that probably need to be tested still in this market. Of course, tomorrow at 2 p.m., right before the start of my show, we're going to have more FOMC meeting minutes. And of course, anytime we talk about the FOMC, we have to give the Janet Yellen prayer. Janet Yellen prayer, he said. For our Janet, who art in finance, hallowed be the Yellen. Thy auctions come, thy bills be done, in twos as they are in sevens. Give us this day our daily fed, and forgive us our treasuries, as we forgive those that default against us. The Italians, and lead us not into recession, and deliver us from deflation. For thine is the borrowing, the easing, and the printing, forever and ever and ever. Amen. And well, I'm trying to type something here. Oh. And anyway, TLT, nice little bounce out here today. Just a counter trend move back up to this gap as far as I'm looking at it. And I think we were talking, I can't remember how long ago it was, but you know, a lot of people are saying this is a reversal. I don't think it is. I think we're just going to continue making these ABC patterns down. And if we look at this retracement out here in the TLT, we're just up to the congestion zone of the previous moves down. I don't think there's a lot to be made of it. And the gap that still exists, that gap is from the, what is that? W? There it is. That gap is from when? The 2nd of June. And we're just back up to that gap right now. So I don't see a whole lot. We still need to get down to this 112.73 from September 17th of 2017. So I'm still just thinking that's it. What else do we have? Well, got a lot of other stuff going on here, so let's take a quick look. Let me get my screen organized just a little bit here. See if we see out a lot of other stuff happening. The UK, and a little pop out here today on the counter side. Duke Energy raised its quarterly dividend for around 4%, and that was interesting. Autodesk up a little bit on an upgrade. ADSK. Nice little pop up here in Autodesk. I don't know if you still have a high volume low you need to test out here at $48.38. We kind of got into that candle on light volume, but that is tough. And what else do we have? Anyway, nice little bounce out here today. I just think that this is one more ABC or counter trend move before we test that 48.38. Kansas City Southern, I think, is it a week from Friday? I think they have earnings. And, you know, that bounce, it's a bounce and a pretty strong move down, which is that. I mean, if you can't really short this thing unless it got up to about 102. There's beautiful confluence on Kansas City Southern, and maybe this thing on earnings pops a little higher. I just can't see what would make it pop. This thing's in a downtrend, and I don't see anything actually changing in the rail business anytime soon about moving crude that would change it. So that's it. What else do we have out here? Okay. FCX. We were talking about a lot of these metals stocks, and my hat's off to, of course, Andy Heck for his call on gold and just how much it was smacked today. This went down a little bit farther, but we have basically breached it in FCX the January 29th low at $16.43. Went to $16 today. Volume is already higher. So could you continue moving along? Do you need to build cause? The answer is yes. But you still need to come back down now and test that $16 low in FCX. I don't see anything changing that anytime soon. What else do we have out here? SLW, of course, silver actually getting even whacked harder than gold. And did I have a... let me get that. What do we get? Gold off almost 1.6%, 1154.80. Silver, $14.98, off almost 5%. Copper down 3%, $2.46. Wow, it's not good. Anyway, silver wheaten out here taking a beating. The red-headed stepchild, the wonderful little seal on the ice flow, just getting whacked out here. And it is, you know, you've now broken through everything. Let's go back even farther out here. Just, is there anything left out here to even find? How many years back do we have to go now? And see silver wheaten. Well, we're back under that level, even back from March 18th, 2008. I don't know if there's a whole lot in here that actually looks like anything in silver wheaten. I mean, this thing busted it. It's busted it with volume today. And, you know, could you see all the way back down to the absolute low of October 27th, 2008 at 256? Well, the chart says possibly. I don't know. It's hard to see out here. But that is. Today's lows are tomorrow's highs. Well, thank you for that. Okay. Anyway, this is an ugly looking chart. Anyway, we're going to go on to some of the stuff that I've been looking at. Of course, I was looking for crude to get back down to 55 or 53, and it blew out that low, which is not good either. And we can see a lot more happening in that segment. As I said yesterday, a lot of the things that I was looking at were some of these, at least shorter-term moves in ExxonMobil. We've gone through that with 13 million shares already today. Is that right? 10.6. We had 12 million shares. You're going into that March 13th low at $82.68 from ExxonMobil. And, you know, volume is not like 50% of that low. We're not really getting out of here anytime soon. As I said, stocks and markets, they don't crash at highs. They crash at lows. And there's a ton of these stocks that have either one-year lows or really not lows of all time. It's not uncommon to see action like crude when you get down to previous lows, and they just blow through them. And as we say here at TFNN, jump the creek. Workday was another one I wanted to watch. This one, it had fairly light volume in there yesterday. Again, a little pop, not a lot of follow through today, a little higher out here. And we got maybe one more day, 2 more days for these stocks to start catching some bids. We also talked about Valero and the crack spread out here. It was narrowing, and you know, we were worried about this thing popping right back into the trend that it was in. You needed about 10 million shares for Valero, going back to the March 25th high at $64.49. And we had 6 million shares yesterday, 7.2 today, 7.2 today. A little bit more volume than yesterday. We're pulling right back into the trading range. of Valero, and it's a big refiner. So you got to be watching that too. Viacom, another one out here at the lows. Again, this is what disturbs me is these stocks should have bounced already. They shouldn't be bouncing now. They should have bounced yesterday. A lot of them have looked like they've broken through a lot of these lows. And that makes me think that there are some high volume lows down there that a lot of these different stocks want to test. And now we're up 6 points on the S&P cash. So what can you say? Just wait around for 5 minutes and we're going to see a lot of movement out here. Anyway, Viacom back up. And what else do we have out here? TransCanada. This one's augured into a new low. Not a lot of pullback yet in these energy stocks either. Thomson Reuters. This one should be having some immense support down here at this $37 level. Kind of touched it on light volume out here today. And that's what, 550,000 shares today. That's not too bad. We did pierce it out here. So there may be a little bit of bouncing off this level, but it's tough to figure it out. Toll Brothers, another one we really should be watching out here today. This has been coming up against its previous high. Not a lot of volume in this one either. You needed 3.4 million shares today as it breaks the May 19th high. We've got 1.6 million shares today. Had a little more yesterday as it tried to get into this top. So, like I said, we've got maybe a day or two for the bulls to press their case higher. Other stocks breaking down. TiVo, this has gone below its two previous lows. Volume, again, was okay when it broke the lows. It was actually 2.5 million shares, but you needed 4.7 million shares. So this thing's kind of bubbling around this $10 level. Chart didn't look all that bad, but again, I should see a lot of people diving into these stocks if they're going to move. We talked about the fresh market also yesterday. I'm not seeing a lot of love in this either. Not a lot of volume off this, what should be a huge level of support. So I'm not expecting this to crack, but you'd think that if this was going higher, that a lot of the funds would be in here buying with both hands. To Silvercorp Metals, SVM. This one's down here on a doji, well below the $1 range, or no, at the $1 range today. If this thing was going to start moving back up, it's got a nice little confluence range right around $1.25. So it wouldn't be a bad 25% range if we saw any strength in silver, but I don't know. Doesn't look like we're going to have any out here. SID, it's a bank in South America. This thing's kind of languishing down here at $1.50. The Semi Group Corporation, SEMG, it's not a bad looking pattern out here. Volume is kind of light compared to the gap up that happened on the 27th of February. We're back in that gap that went up with 1.5 million shares with 370,000 shares. So kind of a little island out here in the middle of nowhere. We're finding a little bit of support, but should be a lot better. I think I'll be back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Las Vegas Sands. Interesting pattern out here, but this is a great deal of what I'm saying, and that is there's not a lot of energy down at the lows, not a lot of energy at the highs. In the case of Las Vegas Sands, it did come down, test its previous low. It did not hit that low, though, but it got down there with light volume. The May 26th low, $49.57, 8.3 million shares. Got into it, but did not test that low on June 29th, 4.3 million shares. It bounced, but of course, now it's bounced to the previous high of June 4th that had 13 million shares. And what do we have today? 6.3 million shares, 6.4 million shares. So it is probably an exhaustion day in the markets, at least for the downside. Going to have a lot of people pile in. Going to have the FOMC meeting tomorrow. I suspect that we will have a little bit more in the notes that talks about raising the rates in September. This is their one option and only option to raise rates, and that is to get it done before the election season starts, right after the in earnest, right after the beginning of Christmas. And you know, we're up 6 points in the S&P, 3.2 billion shares, which is normally what we have about 5 minutes before the end of the day. So a huge amount of volume coming in, probably pushed by the Fed, and just going to stabilize the markets for a while. And then we'll face the same thing a week or 10 days from now, then a week or 10 days from that. and there'll be all this jawboning as they continue moving this market back down. But I don't see anything that's breaking out at new highs with volume, or at least a lot of stuff. The only thing that's breaking out is anything that's been financially engineered, i.e. bought out with free money. If you got free money, why not buy everything? Now, some of the other stocks that I think are interesting is Johnson & Johnson, because we've got earnings coming up on it. I think it's going to tell us a lot. We did get kind of a test. It did pierce the previous low out here, and it did it on light volume, and we're up a little bit out here today. So a few of these stocks look like at least they found a temporary bottom, but kind of tough to tell. Candy Technologies, the electric car company from China/India, it has broken through, and we're probably going to see, no, I'll go through them tomorrow, but the solar stocks just absolutely destroyed. And any alternative companies that are in the same space are getting whacked out here. I think, let's take a quick look at TAN, which is the solar ETF. And this thing has been blown apart. But I told you about these stocks a long time ago, and that is that they don't make any money. They haven't made any money. They're not economically viable. And, you know, 6 years ago it was the fuel cell stocks. Today it's the solar stocks. There'll always be something the government's fiddling with that is not economically viable. But talk about an ugly ABC after ABC down in this TAN. You know, you're down to this gap that it had on the 3rd of February of 2015. And it's just hard for me to see that there's a whole lot more out there to this. There's no new technology that I've heard of that's vastly going to improve either the efficiency or the storability of electric power. And almost all of these subsidies that are in this particular sector are going to be gone next year. So a lot of stuff happening out here. Keep an eye on the skies. And of course, all eyes on China in the morning. In the meantime, sell when you can, not when you have to. Catch me on Tiger TV channel 14, same bat channel, same bat time. Hang on for Andy Heck.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.